Hello, people, and some of you might be wondering why we just went a couple hundred points up. It is because the SEC just approved options trading on the IBIT ETF. Now, I'm not too crazy about options trading or leverage or the secondary market, but some people are indeed very, very excited about this. I mean, some people really like trading options. That's just not me, but some people are. Congratulations to them. You have another way to dig into your trading. And the big trading houses, they do actually do a lot of options trading because they have a lot of money. Because you have to actually pay money in order to buy options, but it can work out very, very well. So if you're into options trading, that's very good news for you. Let's move on to the real news. And BingX has been hacked. They lost about $26 million. Now, only their hot wallet is breached, so the losses are kind of controlled. Now, some people will say it's definitely an inside job because people always say hacks are inside jobs. But BingX actually has been hacked. They had to basically close the exchange, close withdrawals, and they said they will reimburse everyone, and they called it a minor loss. But now, after some time, the suspected hack climbs to $52 million in losses, so it's not as minor as they want it to be. So BingX claimed withdrawals and deposits will be restored within 24 hours. This was 12 hours ago, so another 12 hours to go. So Singapore-based cryptocurrency exchange BingX estimated loss from a suspected hack on September 20th has passed $52 million. That's quite a bit of moolah, guys. Double the earlier reported $26 million. When they first reported yesterday night, it was $26 million, but it's doubled. It could keep running up. The total loss climbed after further investigations revealed substantial damages across multiple blockchain networks, so not just one. As more wallets identified the total loss grows, they could end up owing $100 million, and that's a lot for an exchange. Initial estimates $13 million were likely incomplete, but updates from forensics firms now reporting figures $43 million show a clearer picture. So hopefully it's not much more than $52 million. So, Cyber's alerts, our system has flagged multiple suspicious transactions from Bing linked to BingX official across several blockchains. So hopefully you guys aren't using BingX because this would hurt a lot. Estimated losses have now exceeded $52 million, with most of the stolen assets currently being swapped. Affected chains include, and this is very important, Ethereum, BNB, Base, OP, Polygon, ARB, and Avalanche. Notably missing Ton and Solana. They didn't actually take those. BingX Chief Product Officer Vivian BingX stated at approximately 4 a.m. on September 20th, Singapore time, which was several hours ago, our technical team identified abnormal network access, indicating a suspected attack targeting BingX's hot wallet. Our threat intelligence system has summed the total loss across all chains, leading to a more comprehensive estimate of $52 million. The loss estimate from Cybers is at the higher end among security experts. Boising provided Cointelegraph with lower estimate of 45, but still close to 50 million, and it could actually keep growing as they identify more wallets. This is turning from a minor loss to a major hack. They're downplaying this incident, and they say it's going to cause minor losses, but remember, the initial report said they were only losing 10 million, maybe 5 million. Now it's gone several times that, and it might not just be minor losses. There has been a surge of hacks targeting Asian crypto exchanges. Obviously, a lot of scammers, a lot of hackers want that money. It's not only white hat attacks, it's also black hat attacks as well. So definitely not boding well for BingX. Another reason to keep your money in your cold wallet and not in the exchange wallets, because part of your money will always be in the hot wallet if it's in the exchange wallet, and they could definitely get compromised. Thankfully, BingX says they are going to recompensate everyone. Now, I don't really know where they're going to get the money to recompensate everyone, but they will. And like I said, I don't think this specifically is an inside job, unless it's one of the employees, obviously, because BingX is a pretty successful exchange. They're making a lot of money. Doesn't really seem like it to actually risk them to actually do this, especially when the CEO and everyone is still there. They can easily be caught and brought to court or something. So definitely, I don't believe the whole inside job thing for this, but it is something to actually keep in mind. In other news, the FBI has raided a Miami waterfront mansion, and it is linked to a $230 million crypto scam. Now, notably, these idiots actually, I think, filmed themselves actually doing the scam and then posted it online, which means the feds have all the evidence they need. Now, For all you scammers, you especially the Zoomer scammers and the Gen Z scammers, because these guys are 20 and 21, so they would be in Gen Z. If you're going to do a major scam for hundreds of millions of dollars, it is best not to film yourself doing the scam and then posting it on TikTok, because that's just dumb. Because then the feds know exactly who you are, what you did, and they're going to come and pwn you like they came and pwned these guys. So like the FBI descended on a luxury Miami waterfront home, and they raided in a raid connected to the theft of cryptocurrency the government said was worth hundreds of millions of dollars. These guys were obviously money laundering and passing them money around. They probably used mixers, and they did probably a pretty good job of covering themselves every step of the way, except for that, TikTok thing where they post the video of themselves actually doing the scam. Now, I don't really know how much likes are worth, and I like getting likes on my video, and you should like this video, but I'm also not doing a major crypto scam worth $230 million, because if I was, I would definitely not be posting that video on YouTube or TikTok, because that would just be dumb. At the same time, agents were serving the warrant in Miami. Their colleagues arrested a man in LA who is part of the same investigation. So one on one side of the country, one on the other side of the country. And it was a $230 million cryptocurrency scam. These guys basically had fake names online. One of them called themselves Anne Hathaway and Dollars, while the other guy called himself Verace God. So one of them was called Malone Lamb, and the other one is Jeandale Serrano. But once again, it doesn't really matter if you use fake names online if you literally uploaded a video of yourself doing a big scam. Note, people, if you want to do a crypto scam, don't do that. They are accused of using these online identities to gain access to people's cryptocurrencies accounts. So some people said it was one person. It doesn't look like it was one person. It says gain access to people, plural, cryptocurrency accounts and transfer the money to themselves. The government says they would then move the money around through various cryptocurrency exchanges and pass through wallets to conceal origins of the currency, the indictment states. But of course, concealing the origin doesn't matter if you posted yourself on social media. In August, the two and others not named contacted a person in Washington and fraudulently obtained 4,100 Bitcoin. I think this is the one they posted on social media, which the Justice Department was worth $230 million at the time. So yes, they randomly got 4,100 Bitcoin, but they kind of threw it away, according to some sources, because they had to just get those likes. They spent the proceeds on expensive cars and designer bags and travel, jewelry, and other stuff. They also rented bought a 10-bedroom, 10-bath home the feds raided Wednesday. Is located at 1021 Northeast 83rd Street and listed on Zillow for $11.5 million. This house is usually rented out to celebrities, sports stars and stuff, and it's worth a lot of money, obviously. But neighbors were actually kind of annoyed at the investigation, obviously, because they said it kind of blocked traffic and everyone had to stay inside and they couldn't actually go out. And this particular place always had Maseratis and Lamborghinis parked in the front yard. They even used it as a movie set at times. But the neighbors that were around said they never saw a sting operation of this magnitude. And obviously the police knew exactly what they were doing because of the social media. Neighbors said not only was it shocking, but it was inconvenient because cops were stay back, get back into your house. Everyone was just stuck in place while they conducted their investigation. No surprise there. I think everyone in the neighborhood was surprised at the amount of cars that were inside the yard or on the property. There were a lot of fancy cars. So very, very rich, upscale place, but they got caught, one in California, one in New York. The feds are not playing around here, and they're probably going to end up in jail for a very, very long time. So once again, would-be criminals, don't post your crime on social media. That seems to be a trend these days. There are a lot of dumb criminals out there that have to basically videotape themselves doing a crime and then post it on TikTok or YouTube, and thinking that they can actually just remove it afterwards and the cops wouldn't have any evidence. Well, that's not the way it works, because YouTube can actually retrieve your videos even after you delete them, especially when law enforcement gets involved, and YouTube and such will have no problems turning that over to the feds. Why Sui has been pumping lately, it is mainly, I think, because of the USDC integration, which has resulted in a growth of the Sui ecosystem. So Sui is integrating native USDC, and CCTP, boosting liquidity and cross-chain functionality. If you're Charles Hodgkinson and you're watching this video, you should take a clue. Because yes, boosting liquidity with USDC, no, USDM is not a substitute and it's not as good because it doesn't have the supply. This is what's boosting Sui right now. Sui's total value locked has risen to over $700 million, showing strong DeFi growth. Technical indicators show mixed signals with MACD suggesting a buy while momentum indicators remain neutral. Now, it might have just pumped a little bit. It might actually retrace a little bit before pumping some more, but Sui is looking good for this bull run. Anyone that gains that much liquidity should look good for this bull run. The upgrade is set to improve liquidity and expand cross-chain transaction capability of the network. Obviously, more liquidity relates to that. So September 17th, which was a couple of days ago, they will introduce native USDC into its ecosystem. The integration is designed to facilitate various digital dollar-backed applications across decentralized finance, DeFi gaming, and e-commerce. Users and developers on Sui will benefit from a more seamless experience with USDC. The process will involve gradually shifting liquidity from the bridge version of USDC to the native form, while Wormhole's portal bridge will continue to function as usual. So like they were using wrapped USDC before, but obviously, as we've mentioned several times, native USDC is much superior to wrapped USDC. And this has improved market performance. Sui has pumped substantially in the last couple of days. This announcement follows Grayscale's recent launch of Sui Trust, which provides investors with exposure to Sui and other cryptocurrencies. That obviously is also part of the run. So like, Sui's TVL has climbed back up to over 700 million. Now it's actually at the time of the recording 1.02 billion, so it's actually hit an all-time high. And this is, I think, is because of USDC and the growth that USDC has actually brought. Sui's network growth is also evident in its DeFi sector. The TVL in Sui's DeFi protocols has risen by over 15% in the last 30 days. Major protocols driving this growth include Navi Protocol, Scallop Lind, Sui Lind, and Aftermath Alliance. Additionally, Sui's stablecoin volume has increased to over $360 million, and the volume on its decentralized exchange DEX platforms has grown by over 32% in the past week, nearing $300 million. So, Sui is doing very well, and it's because of USDC. The increase in liquidity will definitely help it in the bull run, as I've explained before. Cardano definitely needs to do this. It also gets more people building and using apps, which is a big, big plus. And from this, they've boosted their massive DeFi potential because they've gained 500 to 750 new validators, and that's going to enhance its decentralization because there's more liquidity, there's more people that's willing to join the Sui network, which is a big, big plus as well. So from Twitter, new Sui validators are loading up before the price gets higher. I'm not sure about that, but I do think price will actually get higher during the bull run, obviously. Remember, validators must require large stakes to participate in the network to accept and use Sui and USDC. Institutional markup similar to Solana. Expect Sui network market cap to approach $5 billion in the short term, approximately 500 to 750 new validators. These two networks are not here to mess around. These are the rails of the future internet. Accumulate Sol under 200 and Sui under $2. So I still think Ton probably has a better chance to be the next Solana than Sui, but Sui is going to do very, very well at this point, especially with their increase in decentralization and validators. And of course, they have to purchase huge stakes in Sui, which locks in even more money. Due to the addition of between 500 and 750 new validators, Marty Party predicts that Sui's market valuation will surpass $5 billion in the near future. It's at over $4 billion right now, so that's definitely not a crazy thing to say, and he could definitely be right. The validators are critical to ensuring the Sui network's security and decentralization. Same thing with other POS. The huge token holdings also add to the token's general scarcity, creating a dynamic in which institutional investors and players must buy significant stakes early to avoid higher prices later on. Marty Party's analogy to Solana argues that Sui network is on a similar path of expansion. Maybe to be decided, but maybe. With both networks positioned as critical infrastructure for the future internet, he said, these two networks are not here to mess around. These are rails of future internet. We'll see about that. Hopefully he's right. One of the most important elements contributing to Sui's growing popularity is the upcoming availability of Circle's USDC on Sui network. We've already talked about that, and that is actually why their validators have been able to expand so much. It's basically the liquidity attracting the new validators to no one's surprise. And like I said, Cardano definitely needs to follow suit. I think they're one of the few big networks that doesn't have native USDC. I don't really care what Charles's beef with Jeremy Allaire is. Him saying that they don't need USDC and they can work off of USDM is entirely and utterly false. Because these other chains are overtaking Cardano. So that's the news for today. Let me know what you think. Like and subscribe. Hit that bell notifications button. Thank you and have a nice day.